Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, June 20th, 2021. Happy Father's Day to all you fathers out there. I want to let you guys know we have a Woodson Wave Report subscription service. Started since 1977. You can see our annual and monthly subscriptions there with the note, I am out of town. We have some limited resources here. We'll do the best we can. But also wanted to let you guys know I have a major announcement after I return at the end of June or beginning of July for all of our YouTube subscribers here, okay? Also want to let you guys know about, I'm in a different setup, so bear with me here. There's our disclaimer. Actually, first our Timer Digest Honor Roll Top 10 awards over the years and our disclaimer there for you guys. Okay, get that out of the way. And one last thing, or one first thing, let's see if we can get this to work. Thank you guys. Let's see if I can, oh boy. Bear with me a minute here. We're on the wrong screen. We'll move that over. There we go. Okay. And thank you guys for all your patronage to the channel. Hit that subscribe button, the reminder bell, and the like, comment, excuse me, and share. Appreciate all you guys patronize the channel. Okay, let's see if we can make this work. I can work with one tab and one browser. I'm used to 2 or 3 browsers open at once and multiple 10 to 15 tabs on each, but we'll make do with what we have here. We're looking at the S&P, an hourly bar. You can see here is the March 4th, 2021 low. We're looking for a minimum retracement of this previous 5-wave advance, okay? It appears that that market has topped here. If it has, these won't be exact to the point. I'll get them as close as I can. But we're looking for a retracement. These levels are 4055, 3992, and 3929. You can see here we have a double bottom, a previous 4th wave. That would be a nice natural pullback if it's only going to retrace the last 5-wave advance. We're going to go 1 degree at a time, and this is the first, our lowest degree. We can go up to the March 2020 low and then all the way to the 1987 low, but one step at a time. Here we are retracing this. You can see from here. Let me see if I can get in on a 5-minute bar. See if I can make this work. Here we go. Let's bear with me while I do this. I like to always have these set up for you guys, but I'll have to configure this, so bear with me a moment while I do so. Let me get that out, and that will have to do. So we have the first 5-wave decline here. There's a couple different waves to count it, but suffice to say we have 5 waves down and a second wave up, and this is the launch of the 3rd wave down. Let me get a Fibonacci extension on this if I can. And I think I have a picture of that, which might do a little better. Here we have 1, 2. We can count this as 3, 4, 5 down to here, and then the 2 up here. I'll count it that way. There's a couple different ways to count this, depending if the 3rd wave extended. Okay, but you can see our once the market went through this tight range here and broke down, that was a good sign to the bearish count that this all-time high on the 15th, which was achieved 3 trading days after our Fibonacci turn date, which we'll get into, which was June 10th. It was a Fibonacci 3 trading days and a Fibonacci 5 calendar days. But once this broke through, this told us that it's not a simple A, B, C correction that ended here. It's looking more like a 5-wave affair. You can see our target there of 41, 44. Let me get into this pic that I have of this for you guys. Here is that 5-minute bar, and I got to drag that over again. Bear with me while I do that. My apologies. We'll bring it into play here and make it bigger. There we go. Here's the 5-minute bar. There's the all-time high. Again, on 615, a 1 up, a 2 down, a 3 up. This 4 overlaps by 5/100ths of a point. Okay, so we could call it a leading diagonal. We could count that a couple different ways, but we've got it this way. But the main thing is 2 up is here, and then wave 1 of 3 down, wave 2 of 3 down, and here comes wave 3 of 3. We should know pretty early on Monday morning if this is in play. You can see the third wave started accelerating to the downside right at the close. Our targets are 41.24 and 4087. As always, we need to make a break, or where are we wrong? And that is right up here at the all-time high of 42.57. A move above there wipes this out and says, nope, you're not going down. You're not getting wave 3 of 3. And that's that. And we're looking at a turn date of, let me get the turn dates up here while I'm thinking of it. And I think I have them, I believe that might be in here. Oh, there's our NASDAQ. We don't want to get into that just yet. Okay, and let's see, I think I may have it. Here we go. Nope, bear with me. Here we go. Okay, so from the May 7th high in the S&P, I don't have it on the charts. I showed you guys earlier the charts there, but you can see we've got virtually no slippage. But the main thing is the turn date of June 10th. It topped on June 15th, which was 3 trading days or 5 Fibonacci days. But the most important thing here is what's highlighted is July 1 is the next turn date, okay? So that's what we're looking at there. Bear with me here while we get to this. So there's our S&P. I'm going to move on. Let me see if I have something else with that S&P here. We've got the NASDAQ. We've showed you guys that 5-minute bar. And, well, I know I had something else in here. But let's just get to the NASDAQ here, okay? My apologies. I like to be organized, but I'm with very limited resources here. You can see from the April 19th all-time high, we've got 5 waves down. We've got the NASDAQ with no slippage on any of these turn dates all the way down to the 19th. Okay, we had a 19th down here and a 21st here. 20th turn date, 1 day to either side. So that the market did the best it could is it split the difference and missed by 1 day to each side for the low and the high. The next turn date was 6-2 or 6-1. The B wave missed it by a day. The most important thing here is the next turn date in the sequence is June 23rd, which should mark the C wave low, since it is a Fibonacci 55 days from the all-time high. Any move down should at least mark that low. It has a potential to be a panic crash, spike low kind of situation, but it should mark at least a C wave low. We're looking at 12,722 for a quality and 12,024 for a Fibonacci 1.618 multiple. Okay, let me see. I had the NASDAQ here, and there is that high, and that is 5-minute. I wanted to get into, yeah. Well, we can analyze this on a 5-minute here, okay? Because we did the overview on the regular there. We had, you can see the double top here, and you can see the NASDAQ. It's a 1, 2, and then a 1, 2, 3. And we'll see how that goes. Let me get an extension here on the NASDAQ. And of course, this one, as long as the all-time high holds, then this count is valid. We're going to look at this here, and I probably should have put that on the other end there, but on the 5-minute, we're looking at 13,912 for the next move down, or 13,800. We need this high, 14,093, to hold. And if I can back out and get you guys an hourly chart, let's see what we can do here. Okay, see if I can make that work. Yeah, there is that all-time high, and there is that B wave. Bear with me while I bring this into focus. There we go. There's that April all-time high. There's a wave A down. There's a B wave up, and we're working on C. You can see our retracements of that. If it was going to go to higher highs, you can see we got a 739 for the 382. right around 13,614. All these are lining up. The multiples, the Fibonacci multiples on the way down are lining up with the Fibonacci retracements for the way up. So we'll look for those to be important stopping points. Here you can see that 13,912 and then 13,800. Okay, and then we want to look at the NASDAQ, and that's what I wanted to show you guys before, the turn dates on that, and I have to drag that over too. Again, my apologies while I get that over here. Here it goes. Okay, we'll make that bigger for everyone to see. You can see the next turn date in the sequence is June 23rd. Okay, so that will be a Wednesday. We're looking, here's our, again, you can see the zero slippage on this, and you can see our targets for C equals A at 12,964, a 1.6 at 12,214, and a 2.618 multiple at 11,001. We should know pretty early in the week with the turn date being on Wednesday what happens on Monday, especially because this thing should accelerate to the downside. Okay, again, the all-time high at, I believe it was 14,211 on the 4th of April 29th. Should be the make or break for this count. I want to look at the Dow. Let's see what we got on the Dow here. There's, and we're looking at everything from the March lows in most of these indexes, and I'm talking about on a smaller time frame from the March 2021 lows. On the bigger time frame, we're still thinking that this thing will correct from the March 2020 lows at a minimum. But like I said, first things first. Okay, so here is that March 4th, 2021 low. We're looking at an hourly chart. Let's get a Fibonacci retracement of that. And we'll put it here and move it up to, it's not going to be exact, but it's close enough. You can see our Fibonacci retracement levels there. And we're right on the 382 with the Dow, okay? That's a 33,263, okay? We got to wipe out this whole thing before we know we're correcting from the March 2020 lows, okay? So that low there in the Dow on March 4 is 35.47. Again, boy, that is off. My apologies there. Let me get better numbers for you guys there. There we go. It's still right at the 382. Okay, but that's what we're looking at in the Dow, and this is at the moment a 382 retracement of that 5-wave advance from the March 2021 low. Okay, and then we're going to look at gold. Okay, because we put out a report to our customers with gold. We had a 5-wave advance there, and we're looking for, I don't know if I can get all that in here, but we had a 5-wave advance, and we're looking for our Fibonacci retracement. I've got the retracement here. You can see the targets, and once it hit our 1769 target, we went along. We're long against the previous low, which should be the 1678 low, okay? So we're long gold again. That move down from the all-time highs did not look impulsive. It looked corrective, meaning the larger trend is up. So gold along. Okay, let's look at Tesla, see if we can make these charts work. Okay, what do we have here? We have an hourly on Tesla, and we're looking at that. That should be that April 14th high. Yeah, okay, there's the April 14th high. We could count 5 waves down here to this low, okay, and then this bounce up as an A, B, C. I can put that in for you guys here. Let me get my wave counts going, and here we go with the A, B, C. Okay, so we got an A up, a B down, and a C up. You can see it's right on the Fibonacci 382, which is 636. The 50% retracement is 665, and the 618 retracement is 693. So this could still go up. Okay, we think this high here will hold, which is right on 780, was it 89, somewhere around there. Okay, so we're looking at, let me get out here and get a bigger picture for you guys on the daily chart. All right, we'll pull that down. There's our day. There we go. See if we can make, yeah, and let's move that out a little bit. Okay. And here we go. Bear with me again. I'm going to pull that over to the other screen so I can move it a lot more easily. It's off record for you guys right now. Bear with me while I do this here. We'll make this much easier to read for the bigger scale. And we'll send it back over to this screen here. Okay, once I get back to our regular place of business will be better. There we go. Okay, we're looking at a daily chart. You can see the all-time high in January. There's definitely 5 waves down for one, and that's actually A, that's mislabeled. Okay, then we got an ABC correction, a 3-wave up. Let me change that right now. I don't want you guys to see something that's inaccurate. Okay, so this 5 waves down in black is A. This 3 waves up in red, ABC, is B, and here we go, okay? We need to see a break of this low right here to confirm the bearish count, which is 546.98. Conversely, this correction could go up. You had those targets before. They remain unchanged, and the bigger make or break target is this high right around 780, okay? So this Tesla is still it doesn't look impulsive up yet, okay? So still thinking this is a corrective move. All right, the impulse is the 5 waves down here. The next impulse is the 5 waves down to a lesser degree here. So this is probably 1 of C and then 2 of C, and then we'll get a 3, 4, and a 5. Let's just get a target here for you guys. If that 382 retracement holds on this first wave down here, okay, and there's the 1, and let's say that holds right at the 382, looking for a near-term target for 3 of C, and we're way down there at 404, which is right around 400, which is the bigger, larger target. So if you think it's not going to go lower than that bigger target, then you would think that it would get to the 50 or 618 or even the 786. So Tesla's still playing tricks. We got to watch this real close to see. It should reveal its hand shortly, especially if the NASDAQ and the S&P are going to enter third waves down. Okay, that's it for today. And until next time, take care, everyone.